Hello everyone, it's Susie here from Esoteric Trading Solutions. I hope you're all well, looking after yourself, being kind to your animals and friends, being kind to your parents, of course, being kind to people that you don't even know, strangers, just to make this world a better place, in a world that's becoming increasingly unfriendly, and kind to the environment and the fauna. Today, I'm just talking about a practitioner's report that came out, a market practitioner's report, which I found really interesting, and I thought I'd bring it to your attention. I really love, stats and economics, and it's talking about cryptocurrency trends as well, and whether excuse me, if these market practitioners think the trends are going to go. So I found this report really interesting. I don't get paid by these guys. I don't have an investment with them or anything like that, but I just wanted to bring the report to your attention because it is a really interesting report. So so if we go to the next page, excuse me, it was a report by CoinShares, and they manage 700 million of assets on behalf of global investors, and they do manage cryptocurrencies as well. And I just found it a fascinating report. So what they were talking about is when the internet came out, it enabled new types of companies to grow, and it made existing companies more efficient and agile. And I do agree with that statement. Also, I add to that it also opened up the world, particularly, for domestic companies to look at all the world and obviously go even more international. This report states that they do focus very much on Bitcoin as the proxy cryptocurrency, but they state that in the world today, there's roughly about 140 million users of cryptocurrency, mainly Bitcoin, and it's between 0.5 to 1.8% of the world's population. They did say they had trouble finding exactly what the stats are for how many people actually use Bitcoin or cryptocurrency. So, and out of a world of 7.4 billion, if you assume that half are going to eventually go into cryptocurrency, then we're talking about a lot of people potentially that could go into cryptocurrency. They also stated that 4.3 billion, or 57% of the world, has access to the internet, and 42% have access to smartphones. Now, clearly with the access to the internet and smartphones, it's going to be a very big ball for cryptocurrency going forward, which means people can get access to cryptocurrencies from their smartphones. Also, it said internet obviously helped local businesses at the time to become global players, unlocking a truly global world in services, goods, money, finance in the internet. And added to that, I will say that it took people a while to actually understand the internet and start using the internet. I think I did YouTube on this ages ago. It took probably about 7 years, but I do think my personal opinion is it's going to take people less than 7 years now, because we do have the internet, to actually start using cryptocurrency and cryptocurrency technology. So it will, in my mind, change the world as we see it. Within the report, they're talking about with the technology, we're going to see increasing automation, which is true. We're seeing that already. Automation in all sorts of things, whether it be artificial intelligence or whether it be banking, payments, or any sort of thing where you can automate it. And it means that humans are basically going to lose their jobs. Now, we are seeing that globally already, and that's been happening for a while, but they're actually in this report saying this will increase. By 2025, they're talking about machines taking over 52% compared to humans of 48%. And currently we've got 71% of humans compared to machines of 29%. So effectively what that means is there's going to be a lot of unemployment going forward in human type labour that we know that exists today. But in saying that, obviously there'll be opportunities within cryptocurrency technology, and that's a fact. So if we look at this, and these are the stats that they've come up with, and they've got references to those stats, have a look at the report because it's 134 pages. It is a long report. I'll put a link up for the report, but it's a really, really interesting report. They're saying that job displacement or unemployment is global, and it's been happening fairly quickly. China, as you can see, and we're talking millions here. Obviously, Europe, Italy, and the like. But when you look at that, this will be quick. Automation is going to happen fairly quickly, but it is especially concerning in emerging economies, where this trend will have a far larger impact, especially on the low-skill labour. And I think that is absolutely spot on. So it's going to have a big effect for emerging economies per se. So if we look at the next slide here, economic forces, there is growing inequality. Now, I've spoken about this before. The wealthier are getting wealthier. And this is the economic force and the social structure that we see at the moment. And all that bodes very well for cryptocurrency technology, okay, and cryptocurrency. Because as the inequality gets worse and worse, there's going to be a lot of social unrest, clearly, and we're seeing that. We've seen displays and riots against Wall Street, people on the streets and this sort of thing, people losing their superannuation money or whatever, while the wealthier get wealthier with negative interest rates and the like. So what they're saying with this little chart here is Warren Buffett, Bill Gates, and Jeff Bezos, top three individuals that are very well known, three men own the wealth of the bottom half of Americans, okay, which is unbelievable when you consider that. The three men should have so much wealth, 88 billion, 97 billion, and 160 billion. It's just massive. Yes, they are talking about, giving away a lot of their wealth, but to think that you have that much inequality in the world, it's quite frightening, to be honest. Also, this chart shows, and we know this for a fact, that the middle classes have been squeezed, and obviously their wealth has declined quite substantially. So the middle class's wealth has declined quite substantially, and I've seen that in other reports as well, so I do agree with that. But yet the wealth of the extremely wealthy has actually gone up, and that inequality is actually getting worse and worse. And with that, you're going to have social forces and social rights and everything else going forward. That's my honest belief too. So it's interesting because this all gives us an idea to where things could go possibly in the future, particularly with cryptocurrency technology and everything else. I'm certainly believing, this is my personal opinion, that there will be forces out there to create more equality, I should say, within the social structure that we live in at the moment. I think that as time goes on, there's going to be more parades and writing for social equality, because we're not seeing it in the current structure or the current life that we actually see at the moment, okay, and that's very unfortunate. The poor are getting poorer. Also, there's going to be a big shift, and they're talking about the baby boomers and the millenniums and the post-millenniums, and obviously before the baby boomers there was like even more traditional population, but essentially the baby boomers are going to become less, of course, and Generation X's and the millennials are going to become more as time goes on. Now, this chart shows 1994. Literally, we had the baby boomers down here, and we had the boomers here, and obviously the silent generation up here. And now the silent generation, as we get older, is not there anymore. The boomers at the top, and the Generation X's are here, and the millenniums come in down here. So it's saying that 68.4 trillion is set to be inherited over the next 25 years, and they're actually saying it's going to be inherited by the millenniums, which, the boomers and the Generation X's are going to be giving that to the millenniums, which is quite interesting. Now, we know that the millenniums don't want to invest in traditional asset classes. They don't want to invest in property, bonds, equity, or cash, but they do want to invest in cryptocurrency, and that's one thing they do want to do. And the millennials are very different to any other age group because they want to invest in cryptocurrency and cryptocurrency technology. Coupled with this, we know that governments, countries, state, counties, councils, and corporates have unfunded pensions, and this is a global problem where they have on their balance sheet liabilities for pensions. Obviously, they have to pay people pensions that have worked in their companies for 40 or 50 or 30 or 20 or 10 years or whatever, but these pensions aren't yet funded. And the question is, this US pension lost ground on long-term liabilities since 2000 and is underfunded, which is not great in itself if these pensions are unfunded, which essentially means we've seen that before. Some people, obviously, when companies have gone broke, their pensions haven't been funded and they didn't get their superannuation, or their, in the American, they call it, 401k. So this is a big problem in itself, particularly if pensions are unfunded at a country, state and global level. I know in Australia the states have a lot of unfunded pensions, and it's going to cause a lot of problem going forward, because who's going to pay for that, if they don't have the money, if the state goes broke. So if we look at the next slide, just get my mouse in the right spot here, go to the next slide, you see that going forward, social forces, Americans, and this is mainly focused on America because the report is written by Americans, they have less trust in banks, governments and financial institutions. And we do see that particularly in governments as well as institutions, and there's been lots of financial scandals and all sorts of things. So people don't trust essentially the establishment, and that's not surprising. So which is very, very unfortunate. So people used to trust and now they don't. So you can see this has actually deteriorated. The trust levels have actually deteriorated quite substantially, from 32% down to 14%. Only some hasn't changed and hardly any. So you see, it's not great. More than half of people around the world expect stagnation, or that living conditions will get worse. And I effectively believe that as well in terms of economic growth. So, the change will have to come from the people. Also, they're talking about 10 years of Bitcoin, new market, new use cases, and that's certainly going to be in technology. And we see that as crypto technology expands even more, it's going to make more of a difference. So, talking about technology here, they are talking about Bitcoin for banking deposits, cross-border payments, but I tend to agree with that. This will be RippleNet and XRP that will take over that handle, because as you know, Bitcoin is too slow with the miners. I know they're looking at a new innovation to make Bitcoin quicker, but I do believe that RippleNet will take that over and become number one there with cross-border payments and the like. Also, they're suggesting that cryptocurrency technology will be taken up fairly quickly, and I've seen that with all the other reports that I've brought to your attention in terms of chartered accounting firms that have done research. For example, Deloitte's, for example, Ernst & Young. There was also KPMG did a very large report on crypto and how many business directors and CFOs were going to take up crypto this year and next year particularly. So if we go to this next slide, they're talking about financial institutions are starting to enter, but we're also seeing non-banks entering the space. They're entering into cryptocurrency and technology. We've seen Square, they have an app where you can buy and sell cryptocurrency. Fidelity, we know that's a big, large fund manager. They have 1.4 trillion assets under management. I've seen figures out there of 2 trillion, so I don't think that's right, the 1.4 trillion they put up there. But they're doing custodian. They've been in the cryptocurrency market for some time. Even TD's looking at it. I've read a few. There's quite a lot of people coming into the space. Also, we're seeing corporates come into the space in a big way as well. So where corporates could white label someone's technology like RippleNet and produce their own coin. And I think that will be a big thing going forward as well. If we look at the next slide, just put my mouse in the right spot here. So we've got that. So if we look at the next slide, of course, we know that cryptocurrency markets in the last 2 years from January have sold off, literally sold off for 2 years. And the highest in the market capitalization for the cryptocurrency market, I remember, was about 880 bill. And currently it's around 288 bill, something like that. So according to these stats, it's down about 70% from its highs. And there's still Bitcoin dominance, which is still around that 60%. Now, I think going forward, that will change, and I believe that there will be a lot of opportunity, not only in Bitcoin, but certainly in altcoins as well, because the valuations, certainly for cryptocurrency market valuations, are quite low from where they've been. And I just think as the technology becomes even more used, it's going to be good for some cryptocurrencies. But in saying that, as I've said before, there's more than 3,000 cryptocurrencies, new cryptocurrencies being added every day, and 90-odd% of them, 95, 99% of them don't have a utility. They don't have a case as far as I'm concerned. They don't earn revenue. They don't have a business case. They don't have a business model, and they're going to bite the dust. And I do believe what Brad Garlinghouse says in that. So I am repeating that again, because you really need to be very selective about the cryptocurrencies that you invest in, and also the cryptocurrency exchanges that you buy and sell cryptocurrency on, because there are a lot of cryptocurrency exchanges. Now, CoinMarketCap have roughly about 330 cryptocurrency exchanges, but I know globally it's anything from 6,000 to 9,000. So a lot of these cryptocurrency exchanges won't survive in the next 2 years. So please do be careful where you do your trading. In my mind, I only invest and I only trade and invest in the largest cryptocurrency exchanges. It's just too dangerous otherwise. And also, we know a lot of the exchanges, the smaller ones, show bogus trading levels, okay? Trading levels and bogus volume, which is not a great story either. So you need to be aware of that, okay? Definitely. So we go to the next slide. They're talking about huge indebtedness. In other words, this global debt has literally trebled over the last 20 years, and the private sector losses are increasing, okay? And this is, quite substantial. If we go to 2019, for example, they're talking debt now being 2.8 times gross domestic product, whereas if you go back here, debt was at 2.4 times gross domestic product, and a lot lower, but still rising. So which means debt is so much bigger than the growth that has been, the growth that is actually happening in the economy. So if the growth is much lower than debt being created, then that economy is never going to be able to pay back its debt. It's just that simple. So, the debt that's being issued or borrowed, it exceeds the growth of that economy by 2.8. So the growth of that economy basically is so much less, which means the economy, the country that borrows the debt, has got buckleys in paying it back, which is a bit of a worry in itself, okay? So the next slide, also there's been a hunt for yields. We know that asset classes are at their extreme prices. In my view, they are, and that's my view. Particularly bonds, yields are extremely low. I mean, absolutely. And some yields are actually negative and still negative. I believe the interest rate curve is too low, and it's not reflecting the true nature of inflation, consumer price index. The purchasing power of our dollar for the last 20 years has gone up substantially, and we've seen it everywhere, whether it be school fees, whether it be the cost of your utilities, electricity, gas, whether it be the cost of housing, whether it be the cost of most things. The only thing that's gone down, is white goods that have been imported by China, but most things have gone up quite substantially. So I don't believe in the CPI that's been bought out by the governments or the statisticians, and I believe interest rates should be a lot higher than what they are. Now, interest rates are a big thing for the valuations of equity markets, because if interest rates are negative or low, it puts the valuation of equity markets way up. Now, if interest rates start rising, then the valuation of equity markets, as is now, with the prices start to look incredibly expensive. Another problem is a lot of debt has been issued at negative yields, which means if debt's been issued at negative yields, on the other side of that, you've had big asset managers buying assets from their side at negative yields, right? So whoever issues the debt is looking for a buyer. So a company issues debt, or a country issues debt, they need to find a buyer on the other side, and someone's buying it on the other side at negative interest rates. Why would you go into an asset at negative interest rates? Surely, the asset, it's great for someone that's issuing debt, because it basically means, you're not paying any interest at all, you're actually getting interest back. But the asset holder that's bought debt is going to actually lose money, and lose money substantially when the yield curve starts rising. And I think that's a big, big risk. Absolutely. And someone's going to have to pay fund for that. And that's obviously in, fund managers, portfolios and that sort of thing. and in pension funds and insurance funds, because they need long-tailed investment assets, and a lot of the long-tailed investment assets have actually been issued under zero negative interest rates, which is not great, which means they're not earning any return at all on their assets, which is just crazy. So it talks about negative yield debt topped 17 trillion earlier this year, which is more than 25% of global sovereign debt and almost 20% of global GDP. I mean, those figures are quite alarming in themselves. So also coupled with that, and it's from the US perspective, we can't stop printing money because it's written by US people. And as you print money within the system, it effectively is like selling the currency. So every time the US government prints money, it's like they're selling the US dollar, okay? And that is not great for currency. And that's what you find with any other country's currency that's been devalued massively. They have been printing and printing money because they needed to get money in to fund the government, but it will have terrible effect on their currency. And we've seen that with Venezuela particularly, with the Bolivian dollar, what do they call it? We've seen it within Argentina and a lot of other countries in South America, which is not great. You keep printing money, the currency eventually becomes worthless, just like what we saw pre-Nazi Germany, okay, within the Great Depression itself. And that's what the US has been doing, unfortunately. Again, it talks about the Bitcoin supply curve. Bitcoin, as you know, has only got 21 million coins, and already 18 million of those have been mined. And it basically talks about lack of supply of Bitcoin. If you have a lack of supply in anything, it's very obvious that price will go up. There's no doubt about that. So as central banks are printing more and more money, Bitcoin has a fixed schedule and a hard cap of 21 million, while countries are printing more and more money. So if you make supply, more and more supply, the price goes down. Less and less supply, the price goes up. And that's pretty much 101 economics. If we go to the next one, Bitcoin certainly, or other cryptocurrencies like XRP, are a safe haven to devaluation. Now we have seen this. We've seen this in South Africa. We've seen this in Iran. We've seen it in Hong Kong, Chile, Argentina, or Venezuela, when there's absolute political risk and economic risk, and there's massive devaluation in a foreign exchange. People will go into cryptocurrency that is more stable, particularly like, for example, if you look at the Venezuela, Bolivia, under the country's leader, who is Hugo Chavez, the currency of the Bolivia got devalued. This was government policy. They devalued the currency by 99.6% to the US dollar. Now, if a country does that, and you've got savings in your bank account in Bolivian dollars in Venezuela or wherever, effectively the currency, your savings, is going to be worthless, right? Completely worthless. If you've got a devaluation where something was worth $100 and now it's only worth 0.05 cents, or say 5 cents, right? It's effectively worthless, right? So in that, when you see that, effectively cryptocurrency becomes a safe haven. And we've seen that in Hong Kong with all the riots in Hong Kong against China. Their currency is becoming more and more volatile. And again, that's not great if you live in Hong Kong and you get Hong Kong dollars. It means your Hong Kong dollars are worth less than they used to be against US dollars or any other currency for that matter, because of political and economic risk, okay? It's a big story, and we're seeing that globally as well. Also, the report talks about a value shift from physical to digital. So, and this is also the same thing that we've seen in the S&P. The S&P has very, very high value stocks such as Amazon, Microsoft, Alphabet, Facebook, JP Morgan and Visa, and it tends to be companies that don't sell physical product. It's more technology type product. Now, I believe going forward we're going to continue to see that, and we will continue to see that with the cryptocurrency technologies, i.e., for example, Ripple. When Ripple gets listed, and it eventually will get listed, I don't know when, but it will, obviously Ripple will be at a hefty value because it's a technology company with software, and it'll be a growth company, and obviously its valuation levels will be quite hefty, and it will probably come on the exchange at 80 times its forward earnings, which is very valuable in terms of the share itself, when normally physical companies that come on the exchange will be around the S&P 500's price earnings ratio of around 15 or less. So essentially, if you've got normal companies, that could be anything from 13 to 15, and the S&P 500's price earnings ratio is about 15, but tech companies will come on at a hefty price earnings ratio compared to the normal market, and that's to be expected because they will have enormous growth like Ripple. People will start using the technology going forward even more and more, and their software is quite incredible, and they don't have much debt at all compared to their growth opportunities in terms of their revenue opportunities going forward. So to me, this is a very interesting report, and I really did want to bring it to your attention. Okay, payments, they say, are the frontier for opening finance, and they're basically saying that the payment system won't come from the banks anymore, traditional payment systems like the banks, i.e. SWIFT, but will be with non-banks. And yes, this will be RippleNet as well, and XRP. They're also saying mobile payments forecast to surpass cash and credit cards by 2021. And certainly in Asia, mobile payments growth will be huge, and it won't come from banks. And that's what we also, and to add to that, we also see that in Africa. In Africa, you can be out somewhere miles away, like in Togo or something, one of the poorest countries in Africa, and they don't have a bank. They might have Western Union there. It's very expensive to transfer cash, and the banks can't do anything, but everyone's got a mobile. And if everyone's got a mobile, they can access cryptocurrency technology to make payments. So that's certainly going to be a huge change going forward as well. And I'm surprised that it didn't put in Africa there, because Africa's a big one, and also South America as well within this report. So again, this payment story, it will be non-financial institutions like Ripple that will lead the way, and it's huge business. This report says that banks don't have the global reach of infrastructure to lead the payment charge. They don't have the hardware, and they don't have the technical ability unless they white label someone else's hardware and technical ability like Ripple. So, I do believe it'll be non-financial institutions like Ripple that will lead the world in payments. It's just a given as far as I'm concerned. Also, they talk about other companies like Samsung, Apple, all those almost like telecommunication companies or mobile companies that will also lead the way in terms of distribution. If everyone's using their phone for cryptocurrency technology, then it puts these corporates in a very powerful position. Absolutely. And again, it's non-financial. And also, corporates like Facebook, social networking corporates will be in a very strong and powerful position as crypto technology takes off as well. Very strong and powerful position, I have to say. So, here we go. So it does also, they're talking about social networks and the new payments network, and again, non-bank, and this trend will get bigger and bigger. They're talking about global mobile payment transactions will be worth more than 3.5 trillion by 2023, which is massive. Okay, now the figures they've got for Facebook Libra, they've got active users of 2.7 bill. I have seen figures out there for Facebook, anything from 1 to 2 bill. Apparently Facebook do have a lot of bogus users or a lot of duplicated users, so it's a bit hard to tell. But, even if you look at these figures, they're staggering. WeChat, a bill, Alipay, a bill, Samsung, a bill, Apple, 383 mil, PayPal, 250, Amazon, 50, and Google Pay, 24. Now, a lot of these companies don't use RippleNet. Okay, now PayPal, I hate PayPal because it's extremely expensive, and if I didn't have to use it, I wouldn't. And they're very expensive. PayPal's very expensive, but things will go basically to cryptocurrency technology that makes payments. Like Ripple, for example. Also, the figures that they've got here: internet users that prefer mobile payments. China, 64%, which is massive. Mongolia, 63%. Brazil, 46%. Now, Ripple is in China. Don't forget that they've got a client who's called Liu, a very big wholesale manufacturing company, and Ripple are already in China, so don't forget about that. Obviously, they're in Brazil. They've got a corporate office in Brazil. They're in South America in a big way. And, they're in certain places. They're certainly in the Middle East. So these figures are saying the Middle East, 36% prefer to use mobile payments and that sort of thing. So we could see Ripple in other large countries as well. I'm not sure whether they're in Africa at the moment, but it wouldn't surprise me if they set up an office in Africa as well. Okay, because Africa, clearly there's a huge market in Africa as well. And they're in India too, which is not on here. Oh, India's down the bottom at 33%. So very interesting. Now, they talk about how long it took different investments to recuperate from losses or the crash or whatever it might have been. And they talk about Amazon, which took literally, tech stock had a crash, and there was tech stock crash in 2000. It took 7 to 17 years for Amazon to recover to its all-time high. Now, they expect Bitcoin to follow a similar trend. I'm not necessarily in agreement with that, because I do believe now with the internet and everything else, it's going to be a lot quicker. And I believe XRP will recover quicker than 17 years. Now, obviously it does take time for any investment, and it says you require conviction, and I agree with that. Absolutely agree with that. But I think it's going to be a lot less than 17 years. My reason for that is because of the prices of where other asset classes are. Other asset classes are extremely expensive, okay? And there's really nowhere else to invest except cryptocurrency. Bond yields are still at all-time lows relative to history. Some curves are still negative in the long end, and they're too low for where inflation is, okay? And bond yields have been skewed down by central banks with quantitative easing and rate reductions when it's been totally unnecessary. Also, the equity market is all-time highs, okay, because of low bond yields. Also, corporate spreads are low of all times. We have negative debt yields, which is just madness. Again, foreign currency will be more volatile as poor countries that have mismanaged their economic affairs continue to devalue their currency, or like we see in the US, where they keep issuing debt constantly to fund their budget and their balance sheet. And by issuing more debt, you're effectively selling the currency, the US dollar, and devaluing the currency. So what we see is asset classes, investment asset classes being very expensive. Property certainly very expensive around the world. High yield debt's very expensive, and equities are very expensive, and interest rates are very expensive. So cryptocurrency valuations, cryptocurrency per the market cap is very low to where it's been. And in terms of investment opportunity, in my personal opinion, I'm not a financial advisor, but for me, it looks like a fantastic investment opportunity. Now, I did a portfolio allocation using cryptocurrency compared to other asset classes that had a higher Sharpe ratio, which means the returns from the investment were higher compared to the risk, and it actually adds a higher return to your portfolio overall, even if you have a small 5% invested in cryptocurrency compared to other traditional asset classes. Now, if we look at that, XRP, for example, has been up, over time, 48,000%. Bitcoin over time has been up, something like 90,000% or so, could be even more. But most of the time, normal traditional asset classes can be up from anything from 12 to 25% in a year. Okay, so when we're talking about 48,000% return like XRP, or 900,000% return, or 90, we're talking staggering figures for cryptocurrency. Okay, staggering figures. So if we go to the next one, it looks at obviously the risk return of Bitcoin compared to other asset classes, and it's basically saying cryptocurrency gives better returns for the risk. Okay, and that's the thing you need to look at, is risk adjusted returns of different asset classes for the risk. Okay, that's what they're effectively saying. They've outperformed every asset class over a comparable time scale, which is very interesting. So for example, they've given us some returns here: debt, funds of funds, hedge funds, real assets, secondaries, venture capitalists, PE, I'm assuming it's price earnings ratios, IPOs, and even there, according to their figures, Bitcoin has been giving us a better return than anything else. Okay, now we know that XRP, since it actually got issued, is given something like 49,000% return or more, which is pretty amazing. And also coupled with that, you've got very, very large markets that are going to be looking for a home for other assets. So they're talking about gold being 7 trillion, oil 1.7, venture capital 60 bill, price earning growth investments 1.2, hedge funds, real estate 1.4. They didn't add the other traditional asset classes, which I find weird, but anyway, bonds are 100 trillion, equities are 70 trillion, FX is about 18.25 trillion, and don't forget derivatives, which are 1.4 quadrillion, according to figures I've seen. It's very hard to know how many derivatives are out there, because there's a lot of the over-the-counter derivatives as well. So what that means is basically, if traditional asset classes are expensive, then essentially there could be, going forward, a move out of traditional asset classes, certainly into cryptocurrency, which is not expensive, and it's new technology which is going to change the world. So in my mind, the way I see it, this is the biggest opportunity for people that know cryptocurrency now, because cryptocurrency is seriously undervalued and seriously cheap to where it's been. This is not investment advice. This is my own personal opinion. So if we look at the next slide, so what I did like about this report as well, they say, and this is what I've been saying all along, cryptocurrency or crypto, whoever's behind it, you still need to make money. So they say that while cryptocurrency may be a new innovation, companies still need to make money and manage their cash flows carefully to grow equity value for investors, right? So the thing is, different cryptocurrencies require different valuation models depending on the cryptocurrency. Like Bitcoin, you can't use a discounted cash flow model, for example. But certainly cryptocurrencies that are backed, or there's a company behind them, you can use the cash flows of the company that own the technology to value the cryptocurrency. And that's exactly the way this should be looked at. Okay, so there's different valuation models for all different types of products. So the market professionals are saying exactly the same thing that I'm saying, and I agree with that totally. Depends on the cryptocurrency itself though, what type of cryptocurrency it is. We have a lot of cryptocurrencies that are all very different, and it depends on the cryptocurrency type to how you value that cryptocurrency. And I've actually done a Udemy course, the second one that'll be coming out, which will be up for sale soon, and it's got 82 lectures with financial maths, Excel balance sheet, spreadsheets and all sorts of things. So it's almost like a 3-year university course, seriously. So let's go to the next slide here. So also, and I agree with this, going forward there's going to be massive amount of mergers and acquisitions, and we've already seen it, Circle, Polynex, Coinbase with these people here. Now I won't go through all this. BK with BitThumb, Nexon, Bitstamp, and the list goes on. Okay. Also, we know that Tron bought Polynex. They also bought BitTorrent, and Tron are now going into the YouTube business. Okay. They're now being a competitor of YouTube. They put on this, one of the biggest YouTubers, I think his name's Pee Wee something. He's a gamer or something. And now he doesn't use YouTube anymore. He uses Tron's platform for YouTube. And basically, my understanding is he gets paid BTT, okay, BitTorrent coins, which is very interesting. And I think that will certainly be going forward. And I do think content providers, there's going to be a lot of competition out there for different platforms for content providers. And I do believe that going forward, people will have to pay for content, simply because you're seeing it with every other traditional content provider out there. Whether it be Block, whether it be Bloomberg, whether it be any of the financial market resources, they're now starting to ask people for money, monthly subscription, okay, because they have to put the content together. It's expensive and all that sort of thing, and I think that will happen going forward as well. But also there will be more mergers and acquisitions going forward. There's no doubt in my mind. So where does this leave everything? It basically leaves everything in the sense that there's going to be a massive opportunity for cryptocurrency going forward. Massive. When other traditional markets are very, very overvalued, and this technology is groundbreaking and it will change the world forever. And given the economic and social environment that we live in at the moment, what's happening, this technology is ripe to take off as far as I'm concerned. Absolutely. And also companies, particularly in the US, according to this, are sitting on huge amounts of money. And they're looking to invest in other things. And the question is, where will they invest? Now, I know, for example, if Ripple went on to the stock market, excuse me, it would be a prime target for takeover, because it has technology that no one else has. It's best of breed, and it can do cross-border transactions within seconds, and no one else has that technology. Okay, so what else we got here? I think that's about it. We're coming to the end. Oh, regulation. So gosh, this is a long one. Sorry guys, very long. So regulation. I'm starting to get a bit of a sore throat. Bear with me for a minute. I need a glass of water. So regulation will come, absolutely, and this shows a map of where places are regulated, where they're not, where people are easy, where people just don't want to, they're hostile to it or whatever. But regulation will come, and there's no doubt in my mind about that. It will certainly come in the US, it will come in Australia, the UK and Europe. There's no doubt in my mind, and it hopefully will be good for cryptocurrency technology, because it's like trying to stop the internet, let's face it. But certainly the governments will want to regulate it, and in that environment, I can't see a world where you can have private cryptocurrency technology like Monero or like some of these privacy coins. Now, I know Brian Armstrong from Coinbase, who's the CEO of Coinbase, said he was very bullish on privacy coins. I just don't know how he can be very bullish on privacy coins, particularly when governments will want to regulate, and I just don't believe there'll be any market for privacy coins, and we've already seen privacy coins being delisted. So I'm actually surprised that he is as bullish as he is. It just surprises me, because privacy coins are being delisted, and we've seen it everywhere on a lot of different exchanges. Monero, for example, being delisted, Verge being delisted, other privacy coins being delisted. So this report, CoinShares, they call themselves, expect increased regulation. Government, certainly in virtual currency regulation, all sorts of things, more money transmission laws, more anti-money laundering requirements, more ownership and licensing requirements, border restrictions and declarations. So I think it's going to be fairly difficult in that environment, if these guys are right, for as I said, private coins to survive. And I do believe the government will regulate, but I think they need to allow the crypto technology to do its stuff, because it's like anything. You can't over-regulate the internet. You can't stop the internet. Like cryptocurrency technology, you can't stop it. So it's very interesting report. Have a look at it. It's 134 pages. I'll put a link on down the bottom, and you can read that report. But again, we've got corporates that are looking at their own coins. We're going to see more corporates doing it. They'll could potentially white label Ripple's technology, and again, in that environment, in my mind, there will be more regulation. Absolutely. So guys, this is all this is not financial advice. This is education only. It's my opinion only. I'm not asking you to buy or sell anything. It's education only, but it is food for thought. Please do come back to me if you've got any questions on YouTube or whatever it might be, and please do subscribe, and please subscribe to my Patreon. There's some great deals. You get exclusive content there. I know what I'm talking about. I've been around for a long time, 35 years in financial markets and the like, and also I've got exclusive on FlexChimp as well. But have a look at this. Come back to me. I really do like questions, and please look after yourself, look after your family, your friends, your putty cats, your beautiful animals and strangers, and please make this world a better place. Thank you.